Okay, so welcome everyone. We're going to talk about some scanner setups, some details, what's going on with some of these trades, a few things to look at, so on and so forth. So a couple of things I want to discuss is, do we have some setups, right? Do we have some setups and some details? And obviously you see that I've got the euro dollar up right now. This is on my radar, right? Now, why is the euro dollar on my radar? What do you guys think? What do we have going on with euro dollar? We've got some of this stuff happening here. I talked about this in the scanner group this morning a bit. And I like this. I like this whole setup. I'm looking at this and I'm going, okay, we've got some bar count stuff. If you look at the scanner software, you can see we've got on the 1 hour chart, here is the euro dollar, right? 369 bars. We're looking for 400. And we want to be, minimum of 50 pips from the 200 moving average, and we're about 65. But as we've said every single time in the past with every webinar that we ever do ever, we need bar count. Oops. Hold on here. Bar counts. We need distance from price to 200 EMA. We need support or resistance to trade against, and we want targets, right? So these are kind of just a little basics, little reminder of what we want to see. So a few things that we want to look at here is if the euro dollar is setting up. Now, honestly, we don't get 1 hour chart setups that often. They actually don't happen too terribly much. We get these kinds of numbers, right? Where you see, the euro made this big move away and then it ended up touching over here at about 200 bars. And, what else do we have? Again, that's probably another 150. It's been, especially the euro. The euro is kind of an infamous one. I mean, where do we even see a bar count? Oh, there's a maybe a semi-interesting bar count from here to here. Again, 270 bars. So pretty uncommon to get a good run on the euro one direction or another. Now, a couple of things that I want you guys to know about is whenever we have a bar count, it's significant, right? There's going to be a decent trade. There's going to be some money to be made on that. Let's go. But I have probably talked about this in past webinars. I can't remember now, but we have what I like to call the old pre-summer push. And this happens typically around, it can happen very early as March, but it's kind of an April to June timeline. And it can start at any point, it can end at, at any point, but this is kind of the average area that we start to see these kind of pre-summer, these big pushes, right? And a lot of things tend to happen in May. So here we are creeping up into the end of April. And we have the euro dollar making this big run, this big move. Now, what might happen? Could this be a big pre-summer push higher, right? Is the euro dollar headed from, from whatever the lows are, some recent lows here? Is the euro dollar headed from these lows right here of 117 to 125? That could be a total pre-summer push, right? Now I would put this right at the right at the beginning of April. This thing starts to run higher. So that could be a nice little pre-summer run for us. We just have to be kind of aware of that. But, what does that do on the longer, larger charts, right? Could it be running up into the 123 and change area? I don't know. We'll see what happens. But what I do know, so I wanted you guys to become aware of that pre-summer movement because that's pretty important. But the other thing I wanted you guys to think about and be aware of is when we have these things lining up, which we have right now, right? What did we say our bar count was? I think it was 368 or something. So yeah, we're right about 368. So that's pretty significant, right? So then we start to say, all right, we want to make sure that we're, 50, 60 pips away from the 200 moving average. Fine, let's go. And this is, as we saw, about 65 pips away from the moving average. But if we look at some of these numbers, right? So currently we're about 62 pips from the moving average. We've seen it, not that much, not that long ago, about 100 pips away from the moving average. How far did it go here, right? We're trying to get an idea of what this will do on the hourly chart. Again, about 122 pips. That's probably going to be the biggest of this most recent run, right? So about 122 pips is what we see there. But remember, we want to get some, some ideas of what the euro dollar does. And so what do I always do on these webinars? We just do kind of a couple of quick measurements of some of the bigger moves. So we saw 122 recently. This is 110. That's probably the biggest move of this whole thing here. We got another about 110 movement there. So pips from the moving average are super significant. And we want to look at these numbers and just make sure that we're, kind of aware of what they are. Here's a slightly bigger run, 160 pips. So we know this thing can go, right? We know it can go. So how are we going to trade this? Oh, here's a bigger run. What was this all about? This was, hourly chart move. And oh, that's only 120 pips. So far, going back at least to the beginning of, about the beginning of February and probably the beginning of the year, I bet we don't see anything more than 150 or 160 pips from the 200 moving average, right? And that's important. That's significant. There's another 110er. And so, and that takes us pretty much to, this is taking us into December. Here's another big move right here. Let's go to that. That's probably our highest, peakest point. And there's, 190 pips, right? So this year, in the last almost 5 months, we've seen, one or two times that it's gone more than 150 or so pips, and most of the time it's less than 150 pips. So when we look at something like this, we say, okay, here's the euro dollar, which is giving us some good bar counts, right? Giving us some good bar counts. We're creeping up on the 400. At this point, I don't care about the bar count anymore, right? I'm saying, okay, it's high enough. It's 360 on an hourly chart. Totally fine. That's what I care about. Now what I'm going to be focused on after we've identified, remember the bar count exists to kind of get us aware of the trade, right? And so once that is starting to happen, then I'm looking at things like, okay, if I'm aware of the trade, of course we want to check all of our basics, right? Do we have any support or resistance levels that look interesting? Anyone, seeing anything there? I would say that probably, going on a little bit of a bigger chart here, probably this 121.50 looks pretty interesting to me. If we could get any kind of a semi-aggressive run up into 121.50, that would put this pretty far away from the moving average. And we might have ourselves a nice resistance level to trade against if it can get up there quick. If it goes up there slowly, then I'm going to be less interested in that resistance level because the 200 moving average will be following it up, right? So if we can get a quick move up into this 121.50, 121.75 area, then I'm excited, right? Because then we're going to be into the 100 plus pip from the 200 moving average zone. And at that point, it's not really a difficult decision for me to say, well, do I take this trade? Do I not take this trade? Of course I take this trade. Of course we take this trade, right? Because we say, all right, if this, and again, going back to what it's done over the last year, if this can make a push up into that, let's say it gets there real quick, and we make a push up into that, that puts us, 140, 150 pips away from the moving average. No brainer, right? We have resistance, we've got a good bar count, and we have the higher end of number of pips from the 200 moving average. We take the trade. No problem, no question, no nothing. We have a missed weekly pivot right here. We have a missed weekly pivot right here. So we have 2 of the last 3 weekly pivots have been missed. We've got a couple of daily pivots in there. And then we have, our market imbalances, which I, love to death. A market imbalance is such an important, great, wonderful, good target that I want to keep an eye on those. So we've got some good market imbalances through here. We've got a nice little one right there. We've got a nice little one right through here. So these levels right here, consolidation and a breakout without a pullback. Come on, mouse. There we go. Consolidation, pullback, breakout without a pullback, consolidation, breakout without a pullback. And, you know, I'm probably just going to use that wick, that most recent one right there. A lot of moving around below that, but these are all market imbalances. So we have kind of a horde of targets, good resistance, good bar count. And we're just, at this point, all we're waiting for is, can we get far enough away from the moving average to make this awesome? So how do we trade this? We use the, hold on here. We use the 200 moving average as kind of our gauge, and we set limit orders. Just set limit orders on this thing, right? And say, okay, I'm gonna put a limit order at least from wherever the 200 moving average is right now. I'm gonna put a limit order, maybe 100 pips, 120 pips from the moving average, right? How conservative do I want to be? How risky do I want to be? If the moving average is right here, right now at 120.22, then I might put my limit order right here around these highs, right? Right there around that highs, just right in that 121, 15, 20 area. We'll go 100 pips away. And I'll say, okay, if I'm going to go 100 pips away, I need to have a smaller trade size because this can go 150, 175 pips away, right? And so if it makes a big, quick run, you know, if I'm getting in 100 pips away from the moving average, I feel great about that. But if this makes an aggressive run and it fills me and then it goes another 50 pips against me, I'm going, that's okay. I was planning on that. And I knew that I think I have a shadow on my face. Sorry, guys. There, you see a little better? If it goes 150 pips away from the moving average, I go, that's okay, because I know that this year, a handful of times this has gone 150, 175 pips away from the moving average. So then with a lot of confidence, I can say, yep, I'm going to put another trade on because this is now, you know, I have a trade that's 100 pips away from the moving average, and this is now 150 pips away. Throw another trade on, piece of cake, done and done. So that's how I'm going to manage this. Now, what target am I going to use to trade to? I'm going to trade to the moving average. I'm going to trade towards the missed weekly pivots. I'm going to just manage my position as best I can and get some bucks out of that. Okay, that's a lot of talking. What do you guys think? How do we feel about that? Questions, comments, thoughts, etc., etc., etc. Everyone feel good about that? Old boy, who is old boy? What's your name, by the way? I think I've seen an email from you a time or two. Hey, James, nice to see you. Sim, good to see you, my friend. Okay, Danny, old boy is Danny. All right, Danny. So yes, when we get into a trade like this, we say I'm willing to put a trade size in that, you know, has a decent chance of going against me, then yes, we're going to start smaller. My second trade size is going to be, you know, depending on how you went in and depending on what your risk tolerance is, it's going to be a little bit bigger. For me, it's going to be a little bit bigger. I'm not going to go 3 or 4 or 5 times larger. I might just go a little bit bigger. Let's say hypothetically that first trade is $1 a pip, and you say, okay, I'm prepared for this thing to go 200 or 300 pips against me. You know, let's just say that were to happen. So you go in $1 a pip, and then we get that next. This makes a nice aggressive run and goes against us, and we have a chance to add 50 or 75 pips in drawdown. You know, I might do $1.50 a pip. Right? So now I'm in 250. Start off with $1. My next trade's $1.50. Done. If you start off with 50 cents a pip, my next trade's $1. You know, something like that. And because we're going to need to bring down that break even real quick, or bring up that break even real quick. So, you know, usually my second trade's going to be at least a little bit bigger. Okay, good. So that's a good trade. That's a good, interesting trade that I like, and that that I think is going to give some good potential. So at this point, that's how we structure a trade, right? We find the levels. We've gone through this week after week, and I keep going through it because I want to make sure everyone's real crystal clear on all these details. When I go through a chart like this, it doesn't take very long to decide. I'm going to go to my scanner. I'm going to look at you know, the 4-hour chart, the 1-hour chart, the 30-minute, the 15-minute, and the 5-minute, and I'm going to just be ready to trade those things. And then once I determine what the bar count is, where the distance between the price and the 200 moving average, and if there's good support and resistance and good targets, it's not really, there's not really much of a decision to make after that. It's just let the trade play out. Let's rock and roll. Let's go. So that's what I look at, and that's what I try to do there. Okay, so I'm just going to talk about that setup. Next thing to move on to, for anybody, and this is a great opportunity to take this all in, guys, for anybody that does not have the robot, get the robot. Go to dtfx.co/robot. In the scanner group, I mean, I don't want to jinx this, but we just can't lose with the robot on this run that we're in. So we have had the robot on buy and sell, just running continuously for a couple of weeks now. And the pound Aussie, I really like the upside potential on pound Aussie. I think that this currency pair could go up a lot, right? I think it could make its way up into this area, into the upper 180s quickly and easily. That's 1,000 pips away. But I have the robot to buy or sell on confirmation, and it just keeps doing either or, right? It keeps selling. It's been selling on this downtrend. It's been buying on the swings up, and it's making us some good cash. If you don't have the robot, go get the robot. It is going to be well worth your money. One of these trades paid for it, and it's taken quite a few trades already on just this currency pair right now. So get the dang robot. It's killing it. So that's thing number next to think about. The robot on its own can be a little tiny bit tricky, but with the trade recommendations we make in the scanner group, there's very, very good reasons to be getting into it, right? When you trade the robot on just on any old currency pair, if I say, well, let me just put it on, you know, the Euro Swiss and let's see how this thing goes. Well, what does the Euro Swiss do over and over again? It consolidates for days and weeks at a time. The robot hates consolidations. We don't put it on pairs that consolidate. We tend to put it on the high volatility currency pairs. I personally hate trading high volatility currency pairs manually because, you know, it's like, where do you put a stop? And is my stop going to get run? I put a stop 200 pips away. Is that going to get run and have this thing turn around and go the other way? The robot, you know, as we've talked about, this scanner and 15-minute trade strategy works the absolute best on lower volatility currency pairs. Lower volatility currency pairs. It works amazingly well to use the robot on high volatility currency pairs, but we need to have a setup, right? It can't just be, you know, like my least favorite currency pair on the planet. I don't even think I have it. Oh, I do have it on here. My least favorite currency pair is the Euro New Zealand, because it's just no rhyme or reason will run 4,000 pips, and I can't seem to trade it. So I don't really ever trade it. But if there's a good setup and a good reason to believe this is going to go somewhere, then the robot can be just magical on a pair like this. The pound Aussie, incredibly high volatility, really tough to trade manually. And not to mention the pound Aussie tends to move the most at, for me, midnight, 1 a.m. Now, I got a lot of kids, so there's no way on this planet that I'm going to trade the London session unless I'm literally in London. So the robot gives me the opportunity to pick up a lot of trades while I'm sleeping. I wake up in the morning, and most of the time somebody in the scanner group says, hey, the robot put us in a trade. And I go, oh yeah, I was just getting over there to look at it. And oh my gosh, while I was sleeping, I made money day after day after day after freaking day. The last trade it just closed out, put a sell trade on over here, made us 100 pips. The trade before that, we closed out early for 30 or 40 pips. The trade before that, it made 100 pips. I mean, it just goes on and on and on. So the robot's awesome. If you don't have the robot, click on the link right there in the chat. Go buy it immediately. It's doing really great for us. Something else we're adding into the group, into the scanner group, is we're trading some covered calls from time to time. A lot of people have stock and options accounts, and they're doing nothing with them, or their IRA is trucking along or whatever. So in the scanner group, I'm adding some stock and option plays, and we use a lot of the similar type of market analysis that we do with our currency trades, but we're doing something slightly different, and we're doing it with stock and options. We've done a couple of trades so far. They've resulted in, you know, in a couple $100 in profit. We've done with minimum trade sizes, right? With minimum trade sizes, everything will result. You know, the 2 trades that we've done so far will make everyone a couple $100. So That's pretty cool. If you went a little bit bigger, then you might have made $1,000 or $1,500 or $2,000. And we're going to keep doing these trades with minimal risk, minimal trade sizes, and a great way to pick up some extra profits while we wait for some of our Forex trades and some of our scanner type setups to play out. So we're doing a good bit of that as well. So things are just moving along. A lot of great things are happening. It's very, very exciting. If you have questions, if you have comments, if you need anything, send me a message. You can always reach us. Don't forget, I'm going to type this in here. You can reach us at support@daytradersfx.com. If you have any questions about the robot, any questions about what we're doing with our stock and options trades in the scanner group, send me a message on Telegram, send me an email at support@daytradersfx. If you have any questions about a setup that you want to look at, right? Here's a currency pair that I want to trade. Looks like a good scanner setup. What do I do? Send us an email. We'll get back to you as quick as we can. Okay, guys, we're going to keep the webinar short today, about a half an hour. That's everything I wanted to cover. I'm going to leave it open for the next minute or two for you guys to ask any questions you have. Is anybody unclear on anything? Is there anything you want me to rehash? The steps of finding the trades that we want? How does everybody feel about everything so far? Danny, you feeling good? Sim, my friend, good to see you. Carol, Chris, Jack, you guys feeling okay? James, Mel, nice to see you. Everyone feeling good about everything? Anything not make sense? Ross, good to see you. Glad you could make it. I don't know if Ross has audio there. Is everybody good on all of that? Great things are happening. It's kind of hard not to make money in this market right now, and we're doing it day after day. So that's always good. So everything's just going great. It's just all working out very, very well. Okay, wonderful to see everybody. Have an excellent Monday afternoon. We'll have another webinar in 2 weeks at this same day, same time, and I look forward to talking with you guys about the rest of the details. Again, make sure you have the robot. Make sure you're following our stock and options trades. Let's just all make some bucks. Thanks, everybody. Lovely to see you all. Have a great Monday, and we'll see you all very soon. Take care, guys.